We all know the agony of the Midwest farmer is a stereotype. How does that mathematically redound out of the Midwest across this nation?
Yeah, well, I mean, it's a good point, because I think what investors need to understand is whether or not sort of that pain that's going to be felt to the extent that the EU responds with agricultural tariffs and China responds after the tariffs that might look like they go into place on Friday. If that creates a feedback loop that kind of might moderate what the U.S. is doing. And in our view, we wouldn't count on it. We think a lot of these trade disputes have some staying power because you see, for example, Senator Corker trying to get a bill through to kind of hamper the administration on these 232 aluminum tariffs. And they can't get it done because it seems like the calculation is it's bad politics. The base is more or less with the administration. So the ag farmer concern is doesn't have the same agency that it would have in the previous administration.
Another generation ago, your grandmother owned TVA bonds. You talk about Senator Corker in Tennessee, the Tennessee Valley Authority, and all that. All of that is based on animal spirit. What is the behavioral tone when you overlay tariffs and many tariffs and the news reports of tariffs on the backbone of our agricultural system?
Yeah, I mean,
it dampens everything, right?
Well, absolutely. And I think in particular, if you put in the context of what's happening in the broader economy, it's not coming at a good time, right? So rightfully so, a lot of economists have pointed out that the steel and aluminum tariffs are relatively isolated, maybe a tenth off of GDP, and the 301 tariffs maybe another tenth. But it starts adding up within the context of, if you think fiscal policy added about half a percentage point, just where we are, a lot of these events can kind of negate that 0.5 relatively easily. You guys were talking about Comcast earlier. Comcast is adding a bunch of leverage to a system that's already at historical highs in gross leverage. That's an economic late cycle vulnerability that when you start shaving off GDP and negating fiscal effects, you don't have to go very far before you say, listen, the stuff that was priced in positively in the markets in 2017 turns into disappointment in 2018. And that's a lot of reason we think U.S. policy is no longer helping markets. It's in a position where it's a headwind now.